Welcome to KNN. KNN is brought to you by Bob Knakal, Chairman of New York Investment Sales at JLL.
Hi, I'm John Hageman, Managing Director at JLL. Welcome to KNN. Today I'm here with Bob Knakal, Chairman of New York Investment Sales, and today we're going to talk about the bright spots in the investment sales market in New York City.
And Bob, within the development sites that you're seeing that activity, is there any certain type of product? Are people focused more on office, residential, hotel?
Well, Hags, it's actually across the board. It's in Manhattan, it's the outer boroughs, and it really is spread out. We have folks who are looking to buy land to build residential condos. We have people looking to buy land to build residential rentals, and particularly with the new encumbrances that rent regulation reform have created on existing housing, folks are looking to build new product into the multifamily sector. We have great activity on land on which hotels can be built. We recently signed a contract on a site for new construction of an office building. So it really is across the board, and it's really great to see. That is truly one of the bright spots in the investment sales market today.
So that's one of our bright spots. What's the second?
Second one is the activity that we're having on the sale of Class B, C, and D office buildings in the city. If you look at a recent activity on some of the buildings we have on the market, the number of CAs that are being signed for those buildings is way up, more than we've ever seen. The interest and activity, number of tours we're doing, it's really been remarkable. And I think a big reason why that's the case is because the fundamentals in the office market are relatively healthy. And then you have all these buyers that for decades were looking to buy apartment buildings that are now looking for other asset classes. Office, and especially smaller office buildings, are an easy transition for them. So under 150,000 square feet is a bite-sized chunk for a lot of these investors. And so they're looking to get into a new asset class, and office seems to be the type of asset that they want to buy more so than others that they have less knowledge about.
That's recent activity. What have we seen on the supply side of those types of buildings coming to market?
You know, the supply of buildings coming on the market in that space, we think will be pretty good. I mean, you know, the opinion of values that we've provided to potential sellers over the past couple of months, that has gone way up in the office sector. So we're very bullish about that. We might see increased supply, and we think the reception that those buildings get in the market is going to be outstanding.
So we talked about land, we talked about office. Is there another bright spot that we're seeing?
Well, you have to look at industrial as well, Hags, and there's not a lot of industrial in the city. There is a little bit more in the outer boroughs than there is in Manhattan, but that market has done extraordinarily well. The increase in e-commerce has added to the demand for last mile industrial. And so we're seeing a couple of things. One, we're seeing rental values in industrial buildings go up significantly, so we're seeing that fundamentals are doing really well. And the vacancy rates are extraordinarily low. On average, the vacancy rate for industrial in New York is just over 3%. In Brooklyn, it's about 2.4%. And in the Bronx, it's about 1.4%. So the fundamentals of industrial real estate are really, really great here. And we expect that trend to continue as e-commerce becomes more and more popular, which everyone is anticipating it will over the foreseeable future. And so I think the future for industrial real estate is extremely bright.
Any other thoughts you want to leave us with before we end?
Sure. Well, I think the one thing that is always comforting is that the market always has been, is, and always will be cyclical. And we've been on a down for quite a while. What goes down must come up. At some point in the future, the market is going to get back to a healthy level of activity, and so just a matter of time. Hopefully it's sooner than later, but the cyclicality of the market is something that will always be with us, and that's something that should give us comfort when we're in a market like this.